Hello, and welcome back to another episode of the Weekly Wrap. Today is Friday, July 12th, and I'll be wrapping up the week that we just had. You can listen to this on Spotify, Apple Podcasts, Amazon Podcasts. You can watch on YouTube. You can also follow the show on Nostr. The NPub should be in the description of the episode, but it's also on the slide in front of you if you're watching on YouTube. So be sure to follow the show wherever you're watching or listening. And the RSS feed is also on the link on the slide. So let's get into the week that we just had. So here's what we're going to go over today. We had some inflation numbers come out. We had the CPI and also the PPI. The CPI actually came in below expectations, but the PPI came in above expectations. So we'll talk about that. Tesla delayed the robotaxi announcement, so that was supposed to be August 8th. It's now going to be sometime in October. Bitcoin continues to consolidate. We did have a little bit of a price rise this week, but we're still below $60,000 at the time of the recording. We'll talk about small caps because they're having a great week. They've started to outperform on the back of some interest rate cut talks. Potentially that could be happening sometime soon. And then I'll finish up this week with a little discussion on uncertain politics and the economy, kind of how that affects the economy and our finances, because we saw some disturbing videos from Joe Biden at his NATO summit. He's clearly on the verge of, death at this point. He's not making any sense when he talks. He's just old. He's senile. He shouldn't be the president of the most powerful country in the world. Regardless, I'm not here to, promote Trump. I also don't think Trump should be the leader of the country. So I'm not here to play politics. But, we just got to be honest. He's not fit to be president. And there's a lot of uncertainty around what's going to happen because you're either going to have a senile old man or a potential authoritarian. That's really what's the unfortunate path we're probably going to go down. So kind of talk about the effects that it has on the economy and maybe why the market has been so strong regardless of all that uncertainty. So let's talk a little bit about the inflation reads that we had this week. So the first one we had was the consumer price inflation reading, the CPI. That came in 0.1% below the expectation. So the expectation was 3.1% year over year. It came in at 3.0% year over year. Again, I actually saw a video of Biden saying that prices were falling. When inflation is coming down, that doesn't mean prices are falling. Prices are actually still rising, but the rate at which they are moving higher is decreasing. So instead of prices increasing by 3.1% year over year, they actually only increased by 3% year over year. So prices aren't coming down. They're just going higher at a slower rate, but that's still a problem for many people. And 3% inflation is out of control. It's a whole 50% above the actual target, quote unquote target of the Federal Reserve, which is 2% year over year. So, we're still 50% over that target. Absolute disaster. And I bet a lot of people out there, you tell me if your year over year inflation is actually 3%, because mine is much higher than 3%. But basically, what's in consumer price inflation versus producer price inflation, I should probably talk about that. Consumer price inflation is your food, housing, healthcare, energy, like those types of things, and the government chooses what data goes into their model and how it's all weighted. So, they change it to benefit them, whatever looks best for whatever agenda they're trying to push. So if they're trying to push interest rate cuts for whatever reason, whether that's related to elections or easing interest expense on the debt, whatever actual reason they want interest rates to come down, they'll cook the numbers here on the inflation prints to help push that narrative. So if they say inflation is coming down, then they'll cut rates. But is your inflation really going down? I don't know. You tell me. You're the ones out there living in the real world. So that's the CPI. The PPI is more for businesses that operate and their kind of costs. So some things that might go into the PPI is raw materials, so things such as crude oil, agricultural products, just raw materials in general. Um, some metals like steel, chemicals, other stuff. Basically, just like these raw materials and things that go into everything that we produce and make and then sell. This actually came in above expectations, but it's below the actual number that the CPI came in at. So the expectation for the producer price inflation was 2.3% year over year. The number came in at 2.6% year over year, so that's lower than the CPI, but it's actually a lot higher than the expectation. So I thought that was pretty interesting. Typically, PPI can be kind of a forecast of the CPI, just as far as general trends go, because the producer prices will eventually be passed down, or savings will eventually be passed down to the consumers in the form of the pricing of the actual products themselves. So if producer prices are rising more than expected, you might see that later on reflected in the CPI, in consumer prices. So um, while the PPI inflation overall is actually lower than the CPI, it's moving higher than expected. So that's an interesting development. In my opinion, you can't really take anything from these two reads. Um, it's a pretty ambiguous read. You know, the PPI is moving higher, the CPI is moving lower than expected. What are you supposed to do with that? And in general, I don't really trust this data in the first place. It's a good gauge in general, but I mean, yeah, it doesn't measure your actual everyday person's expenses. It's more so for perception and pushing the agendas that they're looking to push, which at this point is lowering interest rates. All right, so let's move on from that. Let's go to Tesla. It was another big week for Tesla. The stock has been on an absolute tear recently, but they delayed the robotaxi announcement. So the announcement was initially supposed to be in August on the 8th. It's now moved to October. I don't believe they gave an official date in October. They just said it's going to be in October. Per what Elon Musk has said in prior interviews, this is not going to require new hardware. This is completely a software update, I guess, that they're going to push out to all these vehicles, all these Teslas. You'll have to pay for it, obviously, but the hardware, as you see, if you're watching on YouTube, I have a picture of the Waymo robotaxis that are in a few American cities. Those are fully autonomous taxis, and they have this weird looking hardware on the top that helps with the FSD. So Tesla is not going to have to do this. They're saying that all their hardware is already built into all the cars, so that's pretty interesting. But we've had a lot of delays as far as fully autonomous or just autonomy in general goes at Tesla. He's been promising since 2016 that fully autonomous driving is only a few years away, and they're still on level 3. So they kind of mapped out like 5 levels of autonomous driving, and the third level, which we're on right now, is the car can drive itself in most situations, but the driver needs to be completely aware. So they need to be completely aware to take over the vehicle at any time. I think the fourth level is like you need to be aware in certain situations, but the car is gonna do most of pretty much all the driving autonomously. And then there's like certain situations where you might need to be aware or intervene. And then the fifth level is just completely autonomous, like you could take a nap in the back seat. And basically, the way I like to think about it is the third level is the human brain is probably still better at driving than the Tesla software. The fourth level is they're probably on par with each other, but you need to be aware in certain situations of like if it's a risky scenario. And then the fifth is the software is better than the human brain, and there's no point in even you staying awake because the software is going to make a faster and better decision than you would be able to. So, I mean, I do think it's just a matter of time till someone figures this out. I mean, is it going to be Tesla? Probably, because of their data advantage, which I'll talk about in a second. But someone's going to figure this out eventually. Like, it's not like we're just not going to figure this out. We're really on the verge of this. So, again, yeah, there's been a lot of FUD. I talked about this in a prior episode, but there's just been a lot of hit pieces on Tesla and Musk in general, which was one of the reasons why I was buying it so heavily earlier in the year. But I mean, it's definitely not a good thing that they delayed the announcement. So I'll move on to just my last point here. I think the reason I stick behind Tesla here is they have a real advantage as far as data goes. They operate their business completely differently than traditional car manufacturers. And even though these traditional car manufacturers are now making deals and coming out with these electric versions of their vehicles or new vehicles that are electric, I don't think they're going to be able to really compete with Tesla when it comes to this new technology, FSD, like robotaxis, anything that Tesla does as far as like energy storage and creating an ecosystem that your car is a part of, whatever that looks like in the future. I think this is where Tesla has the real advantage. They have all the driver data. I mean, they pretty much have a monopoly as far as drivers' data goes, because these other companies can't take the data that Tesla's been able to take over the years. And in addition to that, these other car manufacturers just aren't built to do the other things that Tesla does. Like making cars is just one thing that Tesla does. Tesla's a technology company. One of the things that they're developing in their ecosystem of technology is a car, but like the reason the car is going to be so valuable is because of the way it fits into the rest of the ecosystem that they're building. So I think that's something that these other companies also can't really compete with. And so it's only a matter of time until those are more obvious and more realized. But I mean, if you can't see this changing already, then I don't really, I don't really know what to tell you to convince you. Yeah, just look at the reality and the facts of what's going on, I guess, is what I would say. But that's my Tesla update for the week. It's been a pretty crazy week for Elon Musk and Tesla as far as the stock price going on a tear and then this kind of delay hampering that. So I'll move on now to Bitcoin. Bitcoin, it's been an interesting 6 months. It's up, as you can see from the chart, if you're looking at the slide, it's up over 35% in the last 6 months. But it's pretty much been down since March, which was when we made the all-time high. That was just above $73,000. And then a little less than a month ago, actually just a couple weeks or days ago, we were at the 1 month low of 54,146. So that's pretty much been the low, the relative low, since we ripped up to that all-time high. And just for context, the price of the recording right now is just above $58,000. So if that changes between now and the time that you're listening to this or watching this, then that's just where I'm at right now. But the reasons for this sell-off, there's a couple reasons, but the main one is Germany has been selling all of their Bitcoin, which don't know why they're doing that. Well, I know why they're doing that. They're raising funds, fiat funds, but they seized a bunch of Bitcoin. They've decided to sell it. They're selling that for euros or whatever fiat currency that they're going to hold. But I think they had like something like 40,000 Bitcoin. Let me see if I can pull that up really fast. But so they've been selling that off. There's only a little bit left, so that will probably be done in the next few days if they keep selling at the same rate. But sorry, because I'm just looking up how much Bitcoin they had. So, yeah, so I think they had over 40,000 Bitcoin. They had over 2 billion US dollars in Bitcoin. That's wild. But they've pretty much sold all that off. I don't know if they'll ever be able to reaccumulate that much Bitcoin. This could prove, I think in like 10 years, 20 years, it'll be really interesting to look back on this and see how that affected Germany. And maybe what could have happened if they didn't sell it. But they're selling it. I think they're going to it looks like they're going to drive that all the way down to zero. There's been opposition in their government. A few characters have really voiced their concerns with this, but they're pretty much already almost done selling it. And then you had Mt. Gox start repayments. So basically, That was a Bitcoin exchange that went insolvent before my time in Bitcoin. They lost a bunch of people's funds, and they're just now repaying that Bitcoin. So there might be a lot of people who held Bitcoin at that time that's now worth a lot of money, and they're looking to sell some of that or all of that. So there's also a lot of selling coming from there. And then finally, the last thing would be as the price declines because of those first two catalysts, you'll have retail sell and get shaken out. So kind of a combination of those three things is why the price hasn't gone anywhere, or if it's gone anywhere, it's gone down since March. We're still up on the year, still up year to date, still up on the 6 months, but since we really went on that tear that which ended in March, we had a drawdown. But one interesting fact I actually heard on Natalie Brunell's Coin Stories podcast was that this is actually the longest Bitcoin had ever gone without a 25% sell off. So we were actually overdue for this correction, um, even if you take out the German selling and the Mt. Gox repayments, like we were overdue. The Bitcoin, I think it was like over 400 days that it went without a 25% sell off, and that's never happened in Bitcoin's history. So, if anything, this is the strongest start of a bull market we've ever had. We had an all-time high before the halving. That had never happened before. We set a record for the amount of days without a 25% sell off. So, I think there's still a lot of reasons to be positive here. I mean, these coins can only be sold once. Once Germany runs out of Bitcoin, they can't sell anymore. Once everyone from Mt. Gox who wants to sell sells, there won't be any more selling from that. So I think there's still a lot of inflows, obviously from the ETFs and the Bitcoin holders who've been buying up these coins from Germany and Mt. Gox. That with the halving just taking place a couple months ago, I think there's a lot of reasons to still be super optimistic here, and I've definitely been buying a lot of Bitcoin under 60,000 the last couple weeks. So, we'll see what happens with that. Obviously, the price could go lower. We could have a black swan type event, recession, something that maybe pushes the price lower temporarily, but I'm still pretty optimistic on this. All right, so as far as stocks go, I wanted to talk about small caps today because small caps have been infamously underperforming for a few years now. This is one of the areas in the market that hasn't made a new all-time high this in the past year, I guess in the past 2 years since 2023. But we did see an interesting development, I thought, this week. Huge pop in the small caps, up over 4% so far on the week. Again, I am recording a couple hours before the close here on Friday, so that could change. But, I mean, we're up a little over 4% right now. I'm using the Vanguard Total Small Cap Index Fund as a reference, but, roughly 4%, 5%, you might be up more or less. But it's been a really good week. They've been up more than the market. Even yesterday, small caps were up 2 to 3%, but the S&P 500 was down almost 1%. And we haven't seen that type of strength from small caps in a while. So some of the reasons for that could be a rotation out of these technology stocks, which I'm not saying that these technology stocks are worse companies than the small caps and that like the small caps there's better companies there. But as far as just like the valuations go, they're stretched on these big tech companies and they're very low even relative to the entire market, U.S. market, in small caps as far as price to earnings. So, you're seeing a little bit of rotation, more money coming into the small caps. But the main driver, I think, are the interest rate cut discussions. You really haven't seen small caps do anything since rates went up. Obviously, they sold off, but they haven't made new all-time highs yet. They really got hurt by the higher rates, which small caps normally do. But over the super long term, small caps usually actually outperform the overall S&P 500. So if you do see some type of a below average period for the Magnificent Seven type stocks, I think you could see relative strength here in the small caps, especially if we see these rate cuts. Personally, I don't put a majority of my portfolio in small cap stocks just because I believe that there's a reason that they're small cap stocks. I mean, obviously, these are companies that haven't grown to the size of the companies that make up most of the S&P 500, but yeah, there's a reason that they're smaller than those companies. They don't make the same amount of money that those companies make. But again, over the long term, if you hold a small cap fund index, you typically will have better returns than just the S&P 500 over a super long period of time. But the last 10, 15, even 20 years, that hasn't been the case here. So I hold a little bit just as a diversifier, something to enjoy when they're up 5% and the market is not. Um, but yeah, this could be a good time to buy into small caps if you haven't, or if you want to kind of bolster your position and you believe interest rates would come down. I think that's a good option to find some alpha in the market. Obviously, if you could find individual small cap companies that you really have conviction in, you could get better returns there. But I just hold the funds as a whole. I have a value fund and a growth fund. All right, so last thing I want to talk about today is the political climate. A lot of uncertainty in politics, and some people worry that might have negative effect on the economy. I'm not talking about this because I want to get all political or criticize one party or the other. I don't identify with either of the parties, and I don't want to promote either of the main candidates. So, yeah, just want to get out of the way before I talk on this. But there were some pretty disturbing videos of Joe Biden just, mentally not there from his NATO summit this week. He called Zelensky President Putin. He called Kamala Harris Vice President Trump. And then there was a video when they asked him earlier, you called President Zelensky President Putin. Trump is basically making fun of you of that right now and saying you're mentally unfit to run for office. Like, what's your response to that? And he just kind of gazes off into space and laughs and then says, listen to him. And it's just, what are you talking about? So there's a lot of people, even within the Democratic Party, that are concerned about this. I was seeing reports that there's going to be a lot of Democratic politicians coming out and calling on him to step down. But what effect is this really going to have on the economy? Well, both parties have proven, and candidates in particular, have proven two things to me. One, that they'll say anything to attain power. On one side, you have Donald Trump, who isn't even a Republican. He was a lifelong Democrat, actually, and was very opportunistic, saw an opportunity to run as a Republican. He did it. He has a cult following, and he had a lot of power, made a lot of things happen. He changed a lot in our political system, and he lost that, and he's willing to say anything to get that back. Okay. On the other side, we have a senile career politician who knows no other purpose of waking up in the morning other than attaining more power. And it's been pretty obvious that they'll gaslight us into thinking anything other than he's mentally unfit to be the president of the United States. So, yeah, they'll both say anything to get power, but more importantly, for this conversation's sake, they will spend an infinite amount of money. Neither of them have any regard for the national debt, the deficit, what that's doing to the economy. They don't even really understand what they're doing, but they just have no regard for it, and they'll spend an unlimited amount of money to keep their power for 4 years or just a short time period. So that's concerning. But the stock market's proven to be resilient through uncertain political times. Typically, especially in times of gridlock or of real conflict, that's actually better for companies because the political parties won't really have time or resources to go after corporations. They'll be going after each other instead. So that's an opinion of mine that, this could be okay for companies. We're still seeing the biggest companies in the U.S. growing their earnings and their revenues, so it hasn't really affected them in a negative way yet. The debt and the poison of inflation and all that, and the debasement of our currency hurts them. But as far as like policy standpoint, they haven't really been hurt because of this sort of uncertainty yet. In my opinion, runaway debt is the real problem. Our debt is so massive that we can't even raise we can't even raise interest rates like we have to fight inflation, because when we do that, the interest expense, so the amount that we owe on our interest on the debt, increases to a point where we can't actually pay it off. So this year we're going to pay more in interest on our debt than we do on the military, and we already spend more on the military than every other country combined except for like China and Russia. So we already spend incomprehensible amounts of money on the military, and we're spending more than that on just the interest on our debt, just the interest. So okay, so they lower interest rates to combat that, so we're not spending that amount on the interest. But then when you do that and you lower rates, that's going to lead to higher inflation, which leads to the debt being higher, which, I mean, and then it's just a cycle. Then you have to raise interest rates to kind of quell the inflation before it turns into hyperinflation. But then the interest expense gets too big, and that happens quicker and quicker, and it gets bigger and bigger every single time. And that's pretty much where we're at right now. And they'll give you a bunch of BS reasons on why they want to lower rates or raise rates or why inflation's going up or down or whatever. But they are spending unbelievable amounts of money. They're running up the debt. It took 165 years for the United States to accumulate $1 trillion in debt for the first time. The first $1 trillion, it took 165 years. The last $1 trillion of debt, so we're at like 35 trillion. The last trillion of debt took 150 days. That's where we're at right now. So we're past the point of being able to fix this. I think it's only a matter of when this breaks and how it breaks is really where we're at. It's one of the reasons why I talk about Bitcoin as much as I do, because I think that this is an escape for people. We can use Bitcoin to escape this disaster that's being run by these people, and then we don't even have to worry about it. But yeah, I really just, the amount of gaslighting I'm seeing right now in the political space is concerning. And people don't really understand how that relates to economics or finance. So I'll wrap it up here. I hope you guys enjoyed this episode. I'll be back on Tuesday with a personal finance episode. Let me know what you thought of this. Be sure to follow, subscribe, like, whatever you got to do on the platform that you are watching or listening to on. And I will see you in the next episode.